Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Thursday, January 29th, London Open Prep. Here are the key themes shaping the session. The US dollar is under pressure as politics overshadow policy. Gold's record-breaking run is still drawing capital and volatility, and earnings and geopolitics are setting the tone from Frankfurt to Beijing. The Federal Reserve kept rates unchanged, and market reaction was muted, but the bigger driver is politics. Commerzbank notes the dollar's moves look less monetary, more political, with the euro edging toward 1.20 and the US dollar index lingering near a 4-year low. There's also progress reported toward a deal between President Trump and Senator Schumer to avert a government shutdown, while remarks from Treasury Secretary Bessent has been in focus. That mix has weighed on the greenback and stirred questions about policy direction and Fed independence. Meanwhile, gold's surge rolls on. Spot prices extended a 9-day record streak, trading around the $5,600 area in Asia, with violent two-way swings after an early spike. Safe haven demand is part of the story, but the speed of the move suggests positioning is amplifying the rally, and banks are lifting targets, with $6,000 calls now appearing. Local markets reflect it too, with Indian gold prices higher. In Asia-Pacific, the Australian dollar continues to lead. AUD-USD pressed to highs not seen since early 2023, near 0.71, supported by chatter that the Reserve Bank of Australia could hike next week, and by reports of easing in China's property rules that buoyed risk sentiment. The yen remains uneasy, caught between a somewhat more hawkish Bank of Japan and domestic fiscal and political uncertainty, plus ongoing intervention risks. AUD-JPY stays bid near 108.50, and Euro-JPY has rebounded. Elsewhere, the Indian rupee steadied after a record USD-INR high, amid speculation of Reserve Bank of India intervention, and Singapore's central bank held its currency policy steady. Turning to Europe, Deutsche Bank beat expectations with about €1.3 billion in fourth-quarter net profit, a constructive data point for the region's lenders. And in geopolitics, UK Prime Minister Keir Starmer's visit to China aimed to bring stability and clarity to bilateral ties, the first trip by a British leader since 2018. Market and sector focus: the softer dollar is broadly supportive for risk assets and lifts major currencies. UOB sees the euro-dollar pair slipping into a range around 1.1920 to 1.2020, while sterling is near 4-year highs with mixed technical signals, some momentum, but hints of a narrowing range. The Swiss franc is firmer as dollar-franc slides, and precious metals remain well bid, though gold's intraday swings are not for the faint-hearted. Looking ahead, the calendar isn't quiet. U.S. weekly jobless claims land today, with producer prices tomorrow. Earnings stay busy, with Apple, Visa, and MasterCard due later, then ExxonMobil, Chevron, American Express, and Verizon tomorrow. Also keep an eye on month-end flows around the London FIX and ongoing efforts to avoid a U.S. shutdown. What I'll be watching today: the Australian dollar against the U.S. dollar, looking for the uptrend to hold if RBA hike chatter and China property support persist. The euro versus the dollar near 1.20, likely range-bound unless U.S. headlines break the stalemate. Sterling against the dollar, where momentum is positive, but could fade if that narrowing range bites. Dollar Swiss, a downtrend risk amid policy uncertainty. Dollar yen, choppy, with any signs of intervention potentially flipping the tape. And gold, an uptrend with elevated volatility. In short, markets are taking their cues from politics as much as policy, optimistic in tone but quick to seek safety when the headlines shift.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.